Hey everybody, Real Estate Ninja here. I hope you're doing well. We're going to talk about 7 different ways, according to Chase Bank, on how to lower your mortgage rate or get a lower mortgage rate when you go and buy your home or you refinance your home. Now, the reason why I say it's according to Chase is because there's a lot that's left unsaid, that people don't understand how banks make money selling mortgages, how they make money acquiring mortgages, convincing you to take out a mortgage with them. And a lot of this can be deceiving. So I'm going to show you 7 ways to make money right now. Also, I'm going to throw it out right here. Here's a QR code. I'm going to put out July sale, $199, 80% off Mortgage Master. And if you decide you want to go to the next level, Mortgage Master 2.0 Investor Series, there'll be a bump offer and it'll be an amazing deal. All right, those are out there. All right, check this out. You know what? Let's start with a little bit of my background. I have been investing in real estate since the year 2001. I sold most of my portfolio at the top of the market, mid 2005, 2006, because I saw a correction, a big correction coming. And ironically, we are in the exact same position today as we were back then, but it's actually a lot worse because people have a very serious insurance crisis, home prices that have skyrocketed. Mortgage rates are actually, ironically, at the same percentage rate as they were at the peak of the other bubble right before the Great Recession. But we have so much more going on with food inflation and things like that. So there's a lot of opportunity. And there are a lot of people that are searching for really low rates. So JP Morgan Chase came out with this list of 7 things to do to save money on your rates. So first off, shop mortgage rates. I absolutely agree. I think that you should have at minimum 3 quotes, 3 loan estimates, and compare exact apples for apples mortgage products. What do I mean by that? You know, I'm a firm believer in fixed rates. However, I used to get a lot of, I probably had over 25 now adjustable rate mortgages. I know it sounds crazy because I was flipping those properties and I had a certain amount of risk. I knew exactly what I was doing. I was buying them, getting a great deal on the loan. I was paying less in fees, and then I was flipping them, right? Paying them off. They had no prepayment penalty. But I'm a firm believer if you have a rental or your own personal home to have a fixed rate. So you need to compare those. Get a sheet out. Do an apples for apples comparison. There's one of those sheets down in the Mortgage Master course that you can download and get apples for apples, just comparing the different fees, the rates are going to save you thousands and thousands of dollars immediately and tens of thousands of dollars over the next few years of the loan. So that's why it's important to get all that information in one area. Okay. Now, number 2, improve your credit score. Now, a lot of people do not know that you can actually do little things like pay down certain debts, which helps your debt to income ratio. And that's good for your credit score. But also there are companies that specialize where you pay them and they monitor your credit. They go after issues on your credit score. And I've spoken to so many loan officers, and hey, type 1 or say I am a mortgage a lender down below in the comment section and let them know I know what I'm talking about. But you really get what you pay for. And there are some companies that are phenomenal out there when it comes to fixing people's credit. And why do you want good credit? Well, because it's very simple. The banks are going to give you phenomenal rates over those people if you have your credit fixed, or those that do not, okay? Because you're going to be seen as less of a risk. So consider paying down debt, consider consolidating debt, not having so many open lines of credit out there. Just give you an example. Let's say you got 3 credit cards, you've got $1,000 on one and 2 of them that are empty, right? Because you signed up for some deal at Macy's or some deal at Home Depot. Well, that's available credit. That could be available debt where all of a sudden they go, hey, we don't like this. Why you got all those credit lines open? You might just all of a sudden tomorrow go out and buy some big tools, a big chainsaw or a necklace at Macy's. You know what I'm saying? So you've got to look at doing that. Now, number 3 is choose your loan term carefully. Well, like I said before, you know, choosing that loan term that has a fixed rate is extremely, extremely important. Also, there's tons of programs out there like USDA loans that offer 0% down in certain areas of the country. There's websites where you can go and check out which parts of the country these loans are for. FHA, which sometimes carries a higher rate, but also the availability of you getting your foot in the door if you find that smoking deal. So make sure you get that loan term carefully. Know what you're getting yourself into. There are a lot of people around the country right now that have purchased homes, brand new homes, where the builder has offered to buy down their rate, but that rate buy down only was for 1 year or maybe 3 years, or there was a staggering where it starts at 4% for the first year, 5% for the next year, then it goes to 7%. And people get completely blindsided because they don't read the fine print of their mortgage documents. Now, number 4 is interesting, make a larger down payment. I know that sounds crazy, but that's actually, it's not always the best thing. What do you mean? Well, making a larger down payment obviously puts you in a position where you owe less on the home. And if you're doing apple for apples comparison, let's say you had a fixed 7% mortgage, 30-year fixed, it's going to bring down your rate. But then what are you holding off in reserves? That's something that's very, very important. Making sure that you have a good, solid account for reserves, not only because the mortgage company mandates that you do it, but because I want you to have enough of a cushion, that money you do not touch just in case there is an extreme emergency, you lose your job, health of a family member fails, and you have a hard time making your mortgage payment. The last thing you want is to lose your home and lose your credit score. So always consider when you're talking about how much of a down payment, make sure, and I've seen people that have 25% down on a home, they put the whole 25% down and say, well, why don't you consider putting down 20%, holding that extra 5% in an emergency reserve account that you do not touch in case of an amazing emergency. And when that emergency comes up, you still don't touch it. You go out and try and find the money somewhere else, work extra hours, sell something, keeping that emergency account. But then if you have to, absolutely have to touch it, you dive in and grab it. Now, this is great that JP Morgan Chase says this, buy mortgage points. And that's point number 5, buy mortgage points. That is the worst thing ever. When you buy a mortgage point, let me give you an example. A point is a fee that a bank charges you or a non-bank to do the loan. And the higher the credit risk that you are, the more points that are involved. And so a point equates to 1% of the loan amount. So let's say it's a $500,000 house and you're putting 20% down on it, which means you're going to have a loan balance, a mortgage balance of $400,000. If they want to charge you 1 point, that means you're going to have to cough up $4,000, 1% of the loan amount, before escrow closes in order to get that home. Now, I want you to understand, that point, that $4,000 never, ever, ever comes back to you. That is a fee for doing business. And where we are right now in the real estate cycle, and when I mean where we are, there was a big rise and then a plateau, and now it's falling. And we're in that 1/6 portion of the drop on a bell curve. And companies, mortgage companies, always charge points right up there. Why? Because they are pricing in risk, and they are pricing in that you are more than likely going to be freaking out. And as soon as, because you're paying high interest rates right now, as opposed to what we've seen in the last, let's say, 10 years to 11 years, you are going to see these banks charge these points because they know that you're going to leave their institution and go get a lower rate the second you can. So they're pricing that in. And there are all kinds of negotiations you do to not pay those points. One of them is seller concessions. But if you want to figure that out, there's a course for that. It says here, number 6, lock in your mortgage rate. You know, to potentially reduce your mortgage rate taking off, you want to lock it in. Here's the problem. There could be fees associated with that. So when you go get your mortgage information, when you go get your loan quote, your mortgage quote, you want to go out and ask them, what's your lock-in date? How long do you lock the rate in? Is there a float down? If all of a sudden you lock in at 6.5% in the next 30 days, Federal Reserve does something crazy and lowers rates, and the bond market all of a sudden just gets way better, which I don't think it is, you know, and it goes down to 6, do you have the ability to have that rate float down? So you want to make sure of that. And then also, how much is it going to cost you to lock in the rate? And then 7, Chase loves to do this. Refinance your mortgage. Well, that's exactly what they want you to do. And there's a little trick, a sneaky trick that mortgage companies do every 4 years if you're paying on time. And that is they call you up and go, hey, how would you like to refinance for a lower rate? And you go, yes. And what you don't realize is because of front-loaded amortized interest, they just reset the clock on you. You think you're getting something because you're saving $150, but really they are crushing it because they got you right back into a 30-year loan. But refinancing your mortgage, remember that every time that happens, there are a lot of fees associated with that. And that's what I want to try and solve, is saving people lots of money. So here, if you want to save thousands of dollars on your next mortgage or your next refi, buying your first home, Mortgage Master Pro, it's 80% off, or you can check out the QR code. I will tell you this, if you, within 14 days, watch less than 50% of it and go, Ninja, I am not going to save thousands and thousands of dollars on my next mortgage, I'll give you your money back. What's that kind of deal for you? Hope you got something out of this. Have an awesome day. The Real Estate Ninja is out.